Welcome everyone to Vested Interest. This is Shane. It is that time again, my favorite time of the week, another portfolio update. That's right, another week has come and gone. Going to check out all the activity in the portfolio today. For those of you who may be new, stopping by for the first time on this channel, we cover dividend growth investing. My dividend growth portfolio specifically, I do a update every Sunday morning. That's what this video is. I also do a stock pick of the day series Monday through Thursday. And for those of you who missed, or I missed this past Thursday, I apologize for that. My dad had some issues. I had to go up there and see him. So I did not put out a video this past Thursday, but typically it is Monday through Thursday every week unless the market is not open. This Monday I won't do a video either, at least not a stock pick of the day video. I may do my stocks to watch or stocks to buy for the month of June as we are rolling out of May, out of one month into another. Can't believe this year is almost half gone. You know, it has really flown by. Hope you're having a great Memorial Day weekend. Let's jump into the video. Like I said, this is a portfolio update, and if you have not done so, go ahead and hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, trying to build a like-minded community of dividend growth investors to share our experiences, share stocks we're watching, stocks that are in our portfolio, stocks we are avoiding altogether. Just share our experiences and learn from each other along the way on this journey to financial freedom. So as you can see here, we added $1,736 in new capital to the portfolio. Let's jump in and see what we did with that capital. Now, starting out here is our first and only options play of the week. As you can see here, May 22nd, we sold to open a cash secured put on Williams-Sonoma with an expiration date May 26th. That was Friday, so that was this past Friday. At $112 strike price, we received $389.45 in premium for that. That was a very nice premium on this one. Actually, it dropped way down one day. I threw this out there. Someone bid on it. So $389.45 right into the portfolio. This is part of that $1,700 that we put in the portfolio right here. Now, as you can see, this expired out of the money, right? And the reason it expired is it was $112 strike price. Williams-Sonoma closed out Friday at the close of business at $113.58. So for this to have been assigned, it would have needed to be $112 or lower. That is one of the downsides of doing cash secured puts. If this happened to close out, drop to $109, I still have to buy it at the $112 strike price. So that is some of the risk associated with options. You could end up buying this whenever stocks are dropping at a higher price than you could have potentially. But in this case, that is not what happened. It closed out the business at $113.58. So I kept the $389.45. I kept the $11,200 in cash that I had to put up to hold this position in case I was assigned those shares. That's what would have covered the 100 shares that I would have gotten. So now what I'm going to do is I am going to write another cash secured put for 112 or 111. I'll look and see what the best premium I can get. I'll probably do that this weekend, and I will do it again for a date of next Friday, right? And that was, again, $389.45 in options premium this week. Now, we did not have any dividends this week. No one paid us any money, so it was nice to get the options premium in lieu of the dividends this week. Now, our first new investments added to the portfolio on May 22nd. So same day we went in and wrote that option play, we went ahead and bought some shares of some companies there. We spent $837.50. With those funds, we bought 20 shares of Sibanye-Stillwater, ticker SBSW. This is out of the materials sector. We picked up those shares at $7.70, and the ticker is SBSW on them. This was a mining company out of the materials sector here. We picked up 2 shares of Johnson & Johnson, ticker JNJ. We picked up those 2 shares at $158.83. This one actually continued to drop. I think it closed out about $154 for the week. So we could have got it a little cheaper if we had waited, but that's the nature of the investing game. You can't always get the lowest price, but I'm comfortable with Johnson & Johnson anything under 160, and really my cost basis I think is 163. So this is bringing my cost basis down and bringing my dividend yield up. So I like that. Pfizer, ticker PFE here. And I'm sorry, Johnson & Johnson is out of the healthcare sector. So is Pfizer. We picked up 5 shares of Pfizer, ticker PFE. Out of the healthcare sector at $36.97. I think this one actually jumped back up. So it's in the $38 range, if I'm not mistaken, at the close of the week. And we added a bit to our Verizon Communications, ticker VZ, out of the communications sector. 5 shares at $36.22. I think this is another one that dropped maybe down into the 35 range. So if it's maybe down there next week, we might look to add. I really want to add some more Johnson & Johnson. Sabani-Stillwater, this one dropped a bit more here too, so I want to add some more there. A lot of opportunities out in the market. But that $837.50 and these new positions added $37.03 of passive income added to the portfolio. That snowball in effect right here. Now, next up on May 24th, we went back and we added another $898.66. So that's that $1,736.16 total that you saw on the first page. Well, actually, you saw 1736, but there were some change in there as well. So with that 898.66, we picked up 4 shares of Realty Income, ticker O. It's a REIT out of the real estate sector. We picked up those shares at $59.80, and I believe this is another one that dropped down a little bit lower. I think it's in the $58 range, so this one might be another one we look to continue to add to over the next month here if it stays under 60. One more share, Sabani-Stillwater, ticker SBSW, as you can see, continue to drop. I think it's even lower than this now, so another one that I'd really like to continue to add to. Anything down here in the $7 range is cheap in my opinion. And this is that mining company out of the material sector. We added 20 more shares of Vale, ticker VALE. This is another one out of the mining sector, the material sector, a mining company here. We picked up those shares at $13.13. I think it did drop into the 12s there for a little bit, but it closed out at the 13.30 range, 13.40 range here at the end of the week. So I'm glad I picked it up at the low 13s here. And we added to our Union Pacific Corp, ticker UNP. This is a railroad out of the industrial sector. Those 2 shares we picked up at $194.78. Another one that dropped way down to $191. I think it closed out the week at $193. So this was a good week to be watching. You know, you could have got some shares pretty cheap. And all total, that $898.66 added another $39.62 over the next year. Pure passive income for doing nothing more than buying shares of good companies and holding them for the long term. Now, again, all total invested $1,736.16, and total passive income added over the next year, $76.65. Very nice to see. A lot of the ones this week were high yielders, right? Realty Income is over 5%. Sabani-Stillwater, Vale is even around 4 or 5%. Verizon, another one. Pfizer, another over 4%. So a lot of high yielders this week. Even though Union Pacific is not necessarily a higher yielder, the majority of the pickups were. So nice to see that passive income roll in. That is the dividend snowball in effect. Now, quick portfolio update running through the sector weights. Communications sitting at 8.54% of the portfolio. Consumer discretionary is 8.64% of the pie here. Consumer staples, 5.76%. Energy is sitting at 7.42%. Financials make up 12.05% of the portfolio. Healthcare sitting at 13.44%. Industrials is 8.56% of the pie. Technology sitting at 9.93%. Materials sitting at 11.31%. Utilities, still no utilities, waiting on a pullback here. This seems to be the safety play right now where everyone is jumping in. Although UGI, the natural gas there, provider seems to be looking attractive right now. I'm going to have to do a little bit of a deeper dive there, but no utilities still. REITs in real estate makes up 14.35%, still the largest piece of the pie, and I do not have any ETFs. I consider this my ETF that I have created, so that's why I do not. I am not saying there's anything wrong with ETFs. I have a couple ETFs for my daughters. I'm actually one ETF, SCHD. I've got a buy purchase set up for VUG, and I'm actually looking at VWO if anyone knows about that one. Drop that down in the comment section below. What ETFs are you in? Now, a different way to look at this portfolio sector weightings here, you can see the percentages that break up the pie here, but you can also see how much I have in each individual sector as well. $11,440.91 in communications, for example, and you can pause this and go through the rest of them if you're interested to look at that. And last, the big portfolio update reveal. I do this every week. I'm going to show you if I'm up, if I'm down, how things are going in my portfolio, every position I hold, how many shares I hold of them, the current price as of the close of business on the previous Friday, the market value, current market value, again, as of the close of business on the previous Friday, my average share cost, so that's what I'm paying per share. That's what I have. This is what I have into it. If you were to add up my average share cost times my total shares. Whether I'm up or down, total returns, you'll see it. If it's in red, I am down. Same thing here, just the percentage. Same thing, if I'm red, I'm down. Sector that they're in, whether they're quarterly, monthly, semi-annual payer, the current dividend yield, my yield on cost, portfolio weighting. So in the previous slide, we saw the sector weighting. So this is by position. So Ally, for example, makes up 4.23% of the portfolio, and you can run down through the list if you'd like to. Estimated annual income is this column. That's what's the most important in my opinion. What payout months? Dividend growth overall. So right now the overall portfolio is sitting at 7.92. Now this is not exactly accurate. I still have not figured out how to do the weightings, because really this should be tied to how many shares you have as well, not just how fast it's growing, but also how many shares you have on it. So they should be weighted somehow, but I really don't know math that well to be able to do that. If someone knows how to do that equation, let me know down in the comment section below. And then there are 15, since this is one of the metrics I look at to add a new position or to see if the positions that are even below my cost basis are worth a buy, I look at them within 15% or lower of their 52-week low. So that's what this is here. And you can run through this. Total shares, $3,859 or 3,859.81 shares. Market value currently $134,010.19. I have $140,773.06, so I am down $6,762.87, down 4.8%. Current yield is 5.104. My yield on cost 4.859. And this really, in my opinion, is what it's all about, whether the market's up, whether the market's down, whether the market is floating sideways. The continual increasing annual passive income provided by the dividends paid out of all these positions within the portfolio sits at $6,839.75. That is awesome to see. Back on track, starting to grow again. That dividend snowball doing its thing. Really nice to see. And then overall dividend growth, again, 7.92% of the portfolio. You can stop this, pause this, and kind of go through here. Anything you want to check out and see. That is really it on this one. Really appreciate you stopping by. Hope you're having a great Memorial weekend. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Again, trying to build a like-minded community of dividend growth investors so we can share our experiences, maybe share some mistakes, share things that have gone well. Options is one that I started to get into. I'm not perfect at options. I'm just getting into it. So if you've got some tips and tricks that you've used in options over the years, I'd love to hear those as well. What positions you're in? Do we have any similar ones? Look at my portfolio there and tell me which ones are in your portfolio too, or what ones you own that I don't. Love to know that. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have a stock or company you'd like me to cover in the Stock Pick of the Day series, Monday through Thursday, drop that down below as well. I'll add it to the topic list here. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money should never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.